We've got an earnings alert on ride-hailing company Lyft, the stock making a U-turn after its results after the vow. Let's get to Deirdre Bosa in San Francisco with more. Deirdre.
Not bad, Melissa. We saw shares initially surge on the back of those big beats and raised guidance. Shares then went negative as the company said that its lockup period is scheduled to end a month earlier than expected. But guys, that really doesn't change the fundamentals, which are improving. This quarter, Lyft gave indication of that across a number of metrics, including revenue per active rider, and said that it's seeing an accelerated path to profitability, which should be music to Wall Street's ears. Now, as price wars ease somewhat with Uber, Lyft was able to cut down its sales and marketing costs. Those include those rider discounts. It also improved its loss guidance this year by $300 million. Now, all of this, guys, raises the stakes for larger ride-sharing rival Uber, which reports tomorrow. It's getting a bounce on the back of these Lyft results. But remember, Uber is global. Even if price wars are easing here in the U.S., that is certainly not a given abroad. It also has more moonshot projects that it's investing heavily in. And remember, Uber has not said when it would reach peak losses, unlike Lyft. So Lyft's analyst call is underway right now. I'm going to get back on it, guys, but I'll be back later with some color. Back to you.
All right, Deirdre, thank you. Deirdre Bosa in San Francisco for more instant reaction to Lyft earnings results. Let's bring in Fast Money friend and Loup Ventures founder, Gene Munster. Gene, great to have you with us. At first blush, it looks like a great quarter. The reversal in the stock, does it have anything to do with the lockup expiration, which is basically around the corner, August 19th?
I think so, Melissa. It was an odd dynamic. The results were out about 45 minutes before the stock had that 10% dip, and that dip came just a few minutes before the call started. So given that, I think this was related because that's about the same time that news about that lockup seems like irrational behavior from investors that shifting a lockup period would have that kind of an impact. But I do believe that was in fact what drove that pullback.
Irrational in that, that selling pressure of an additional 275 million shares that would exist either August 19th or 3 weeks after August 19th or 4 weeks, and it doesn't really make a difference?
Exactly. That doesn't really make much of a difference.
Are you feeling better about Lyft and its prospects than 24 hours ago?
I am, in particular about this concept of increasing revenue per user. So that was about that was up about 23% year over year. It was about 10% higher than what I was expecting. And why that is important is when you think about some of the comments from Deirdre on this competitive environment, that's a sign that some of this competitive duopoly between Uber and Lyft is at least subsiding in the near term. That's critical because when you think about this story, this is all about laying the groundwork for the long term. And I want to quickly emphasize that the long term has a give and a take to it. The negative piece is that this investment phase, which is impacted by how much revenue they can get per user, is pretty significant. They lost $600 million in the quarter compared to, let's say, Tesla, for example, that lost $400 million in the last quarter. But the positive, and this is why I'm generally more positive than I was 24 hours ago, the positive is that this is still a nascent market. We're talking about 30 million people in the U.S. use some form of ride sharing on a monthly basis. There's 255 million adults in the U.S., so we're roughly 12% of the way there. Obviously, we won't get to 100%, but the idea of being able to create some leverage, or at least hope of leverage, I think is a material step forward for the company on this earnings report.
Gene, quick question, and you obviously know this a lot better than I. Third quarter guidance, I mean, this number seems staggering to me. And I don't want to get too down the weeds here, but adjusted EBITDA, they have coming in midpoint positive $200 million. I think the guidance was for negative $300 million. That's a $500 million swing. Where did that come from?
Well, part of it's this leverage, and specifically is you're getting the guidance was about 10% higher than what the street was expecting for September. That powered some of that. There must be something that's going on related to some of the OPEX and some of the investments that they're doing. Maybe they're paring some of that back to get there too. So it's a combination of both. But the most obvious is just this idea that they're increasing revenue per user. The users, the number is 21.8 million. That was essentially in line. It was 3% better than what the street is focusing on. So the simple answer is how they got there is we're starting to see some leverage. And part of the leverage is they're gaining market share, too. This is another important point about how I feel about the story longer term is, yes, Uber does have more levers to pull with other bets. But if you look at just pure the U.S. market, Lyft grew at 70%. Uber's going to grow probably sub 20% in the U.S. This is the second quarter in a row where they have gained what I think will be measurable market share, which is some part of the equation to ultimately getting to profitability.
Did you say Lyft was going to grow 70% and Uber was going to grow 20% in the U.S.?
Yeah, the just reported quarter, Lyft reported 70% revenue growth, and the Street's looking for generally just under 20% for Uber for June.
Quite a differential. Gene, grade the quarter for us.
I'm going to give it a B+. And nice leverage in the business. We talked a little bit about that. I'll also see this idea of revenue per user being a positive. And the reason why I didn't drift into the A territory had nothing to do with the lockup, but was the reason why I kept it in the B category was that we still have a long way to go. This is a special type of investor that needs to be ready for a lot of lumpiness. And you see it with the street models getting whipped around here tomorrow. And so all in, Melissa, B+.
All right. Gene, great to see you. Thank you.
Thank you.
Gene Munster of Loup Ventures. Najarian, Uber's out tomorrow after the bell.
Yeah, and it just makes.
Would you rather?
Would I rather? Oh yeah, I can already answer that one. Right to it. I'm going to jump right on it. I'm going to say Lyft. And the reason I'm going to say that is I've been looking for growth. Both these two companies lose money, and we know we've talked about that. We talk about peak losses and all the rest of it. But it seems to me, unless something changes in the dialogue we hear back from Uber, maybe it seems as if right now Lyft is taking some of that share away from Uber. And in which case, if they are, and their revenue per user is as good as it sounds like it might be, and the growth that Gene's talking about of 70%, that tells me that they are eating a lunch right now of Uber, at least here. Now, Uber obviously has the global exposure as well. But I think Lyft right now, it makes sense to me finally, because maybe there's a light at the tunnel of when do they start to make money.
And the global exposure may or may not be a good thing for business.
Yeah.
Right. Yeah, I don't know. But I think all of what Pete's saying is really interesting about their metrics being better. I'm wondering if Uber really should actually be down for a couple of reasons. Remember, we saw Beyond Meat, huge quarter, but then they announced their lockup was expiring early. They ended up pricing that really in the hole, right?
Yeah.
So if Lyft were to do the same thing, you got to wonder, Uber, would I rather be a seller of Uber here to be able to buy Lyft on a very potentially, nice opportunity to buy it in the hole versus where it's trading right now on good numbers.
Yeah, I mean, it's 275 million shares that will become available.
If that all trades.
Right, yeah.
What made Lyft more attractive going into this IPO season for both these companies was the lack of supply. I mean, there's a much, much, much smaller deal. I actually think liquidity ultimately helps this company. And I just remember, going into the IPO, remember who had the growth, as we talked about, 41%. I'm not sure I understand Gene's numbers. I'm sure they're right, but I know 21.2 million in this quarter versus 15 million a year. That's 41%. And going into the IPO, they were growing at about 50% year over year. So as far as I'm concerned, this isn't deceleration. This is a company growing at an enormous clip, much in excess to where Uber is.
Now, I know you might be biased because of your past history.
No question. I was one
as
of,
a driver.
I'd like to run the video if we can, because
Lyft.
I was one of the original Lyft drivers, as you can see. Take a look at this genius video.
Nice car,
here.
by the way.
Nice
that
gloves.
Lyft or Uber?
I like those gloves.
Lyft.
Oh, that's
Pedro.
Lyft.
That's
You
a
keep your
Lyft.
pink mustache up front?
Excuse me?
Anyway,
Love the laugh track. Really helping my bad jokes out, too.
The white gloves were tremendous. The hat. I mean,
can we comment for real?
Yeah, I'm going to give you a comment. If you can wrap your head around this, around the lockup coming off August 19th, if you can get your arms around that and are comfortable, this was a very good quarter. I mean, you see the growth that Pete's talking about. That's what you have to be. If you can get comfortable with that, you buy the stock. I would be concerned. Listen, the stock trades 4 million shares a day. 275 million aren't going to come on one day. That is a significant number, though.